Payam here from Niche Advice. Hope you're well. I was speaking to one of my clients actually, and he wanted to get my opinions about all of these sort of property millionaire type sort of seminars that I'm sure you've seen adverts on, and what I thought about the whole setup of that industry, whereby property clubs, and you go there and people tell you how to build your portfolio and make a lot of money, and some people do and some people don't. I would imagine a majority of those people don't end up making money and end up paying for lots of expensive training. The realities are, if you're going to need to buy a house, whether it's a buy-to-let, whether it's a commercial, you're going to need a big deposit if you are inexperienced. Okay. Now there are, of course, there's all sorts of schemes where you don't own the property and you manage it. But how are they going to fare at the moment in this sector, in this industry right now, in this climate? They're going to struggle. Okay, they're going to struggle because they were always built on, the HMO strategy, the Airbnb strategy. Well, that market, and certainly around the Airbnb, that's gone. At the moment, there's problems within that sector. Okay, so if you've handed some money over, or you've signed a contract to manage a load of properties, you're going to struggle. Okay, because the sector is not there. Now, thankfully, your landlords, hopefully, or the people you're dealing with, could be understanding because it's happening to the whole world. However, there are problems within this. My feeling is, if you're going to go into property investment, certainly on a buy-to-let front, let's keep it simple around buy-to-let. You're going to need a big chunky deposit, and I think that's a good idea. I think if you can rustle up your deposit money, that gives you a start. If you don't have a deposit, a lot of those, I've done videos around 85% loan to value deals. First of all, what's happened to them? So as soon as the market's taken a downturn, most of the lenders have pulled their 80% and 85% loan to value deals. So what's going to happen, say in the next 6 months or a year, if you did one last year or 2 years ago, when you come out of those deals? Well, you either have to put a load of money in to make the loan to values up, because most lenders are now offering 75% loan to value maximum. Okay, so you've got to put that money down, or you go on the lender standard variable rate, which is much higher. Okay, so you've instantly got a problem. So all of those deals that people were doing at 80% and 85%, they're going to have problems. There's issues coming up going forward. I've always had a conversation. When I have a conversation with clients, I say, look, I don't want you to go 80% loan to value. I don't believe in them. I don't think it's right. It's not only not a great product, but also, there's issues with it, so you're going to get those people. So all of those people that were buying at 80 and 85% loan to value are going to have fundamental problems remortgaging right now. Okay, so you've always got to have that in mind. There can be a downturn. We came up, my business, myself and Richard, when we set up this business, it was in the middle of, I think it was in 2007, 2008, when the crash happened, the last crash happened. We used to work for a mortgage firm. It was a very large mortgage company with about 400 staff. And we saw that, and I was a marketing director there, and I was a senior manager within the company, and we saw how everything sort of went pop when the market went pop, and we saw lots of landlords who were doing very, very well, lots of businesses that were doing very, very well, overnight made no money. So we've always stayed on the cautious side. That's why we've decided to keep Niche Advice a small business rather than expand that with lots and lots of brokers. But the problem is, a lot of those people that have invested over the last 10 years have not seen a downturn. And this is going to be a downturn. So it's going to be very important that you plan your strategy now. Don't just fall into things. If you're highly geared on properties, let's look at your portfolio. If you've got a portfolio, and see what we can do with around the portfolio of lowering the loan to values across some of those properties. Okay, because it's coming. There's going to be problems coming. So it's best to plan, and it's best to get things sorted out. Hope you found this useful. Sorry, it's a little bit on the negative side, this video. I can be jumping up and down saying, oh, we're doing fantastic and it's going to be great. Everything's going to be all right. Just give me all your mortgages. But the truth is, there is a storm coming, and we need to all plan what to do about this storm. Please like and subscribe as always. Read it, put in some comments. I always like to return the comments and give me some suggestions on what you would like me to cover. Thank you so much.